Beyond the basics, exploring alternative investments. So, you don't have any money to invest into real estate or Airbnb, no worries today, we're diving into the world of alternative investments. Now you've probably heard me talk about the importance of a diversified portfolio. Stocks, bonds, real estate, you know the drill. But what if you want to explore options beyond these traditional assets? That's where alternative investments come in. We're talking about things like luxury watches, farmland, even royalties from music. These investments can offer unique benefits like a hedge against inflation or even passive income streams. Let's kick things off with something tangible and maybe a little bit flashy: luxury watches and handbags. These items are not just accessories, they are symbols of status, craftsmanship, and sometimes even art. When you wear a luxury watch or carry a high-end handbag, you're making a statement about who you are and what you value. Now, I'm not talking about just any watch or bag, we're talking about those iconic brands like Rolex, Patek Philippe, Hermès, and Chanel. These brands have stood the test of time and have become synonymous with luxury and quality. Their products are meticulously crafted, often by hand, and are made from the finest materials available. These aren't just fashion statements, they can be legitimate investment pieces that appreciate in value over time. Unlike fast fashion, which loses its value almost immediately, luxury items can hold or even increase their worth. This is especially true for limited edition pieces or items that have a unique history or provenance. Think about it. A rare Rolex Daytona or a vintage Hermès Birkin bag can be worth significantly more than its original retail price. These items often become more valuable as they age, especially if they are well maintained and kept in excellent condition. Collectors and enthusiasts are always on the lookout for these rare finds. But here's the key: condition, authenticity, and rarity are absolutely crucial in this market. A watch with scratches or a handbag with wear and tear will not fetch the same price as one in pristine condition. Similarly, items that come with their original packaging and authenticity papers are more desirable. You need to know what you're buying and make sure it's the real deal. Counterfeit items are rampant in the luxury market, and buying a fake can be a costly mistake. Always do your due diligence and, if possible, consult with experts or use trusted platforms to verify authenticity. That's where platforms like Chrono24 for watches and Rebag for handbags come in. These platforms specialize in luxury items and offer services to authenticate and appraise your purchases. They also provide a marketplace where you can buy and sell with confidence, knowing that each item has been vetted for quality and authenticity. They offer authentication services and provide a marketplace for buying and selling these luxury items. This added layer of security can give you peace of mind knowing that your investment is protected. Plus, these platforms often have experts who can offer advice and insights into the market trends and the value of specific items. Remember though, this isn't about flipping a watch in a week and making a quick buck. The luxury market is more stable and less volatile than other investment avenues, but it requires a long-term perspective. The value of these items tends to appreciate slowly over time, making them ideal for those who are patient and willing to wait for the right moment to sell. These are long-term investments that require research, patience, and a genuine appreciation for the craftsmanship of these pieces. It's not just about the monetary value, it's also about the joy and satisfaction of owning something truly exceptional. So, if you're considering investing in luxury watches or handbags, take your time, do your homework, and enjoy the journey. Now let's shift gears from luxury goods to something a little more down to earth, literally. We're talking about farmland, an asset that might not have the immediate allure of a luxury watch or a high-end car, but one that holds immense value and potential for long-term growth. Investing in farmland might not sound as glamorous as a Rolex, but trust me, it can be a solid addition to your portfolio. Farmland offers a unique blend of stability and growth, making it an attractive option for those looking to diversify their investments. For centuries, farmland has been a reliable asset, providing both income and appreciation. It's a tangible asset that you can see and touch, unlike stocks or bonds. This physical presence often gives investors a sense of security and permanence. Think about it. People will always need food, and farmland is the foundation of our food supply. As the global population continues to grow, the demand for food will only increase, making farmland an even more valuable resource. When you invest in farmland, you can generate passive income through crop production or by leasing the land to farmers. This dual income potential makes farmland a versatile investment. Plus, farmland has historically been a good hedge against inflation. As the cost of living rises, so does the value of farmland and the income it generates, helping to protect your investment from inflationary pressures. Now, I know what you're thinking. Buying a whole farm is expensive and probably not feasible for most individual investors. The upfront costs can be daunting, and managing a farm requires a lot of time and expertise. That's where farmland REITs come in. These real estate investment trusts allow you to invest in a portfolio of farmland assets without having to buy an entire farm yourself. It's a way to gain exposure to the agricultural sector with a lower financial commitment. REITs, or real estate investment trusts, allow you to invest in a portfolio of farmland assets without having to buy an entire farm yourself. They pool money from multiple investors to purchase and manage farmland, distributing the income generated back to the investors. Platforms like AcreTrader and Farm Together take it a step further by offering fractional ownership in specific farms. This means you can invest in high-quality farmland with a much lower barrier to entry, making it accessible to a wider range of investors. This means you can invest in high-quality farmland with a much lower barrier to entry. These platforms provide detailed information about each farm, including its location, crop types, and financial performance, helping you make informed investment decisions. So whether you're a seasoned investor or just starting out, farmland offers a unique opportunity to grow your wealth while contributing to a vital part of our global economy. The sound of passive income investing in royalties. Okay, music lovers, this one's for you. Ever imagine yourself earning a piece of the pie from your favorite songs? Well, investing in royalties makes that possible. Royalties are payments made to creators of intellectual property like music or patents whenever their work is used or sold. When you invest in royalties, you're essentially buying a share of those future payments. This can provide you with a passive income stream that's diversified from traditional investments. Plus, it's pretty cool to know you're supporting the arts while potentially earning a return. Platforms like Royalty Exchange and Songvest have made it easier than ever for retail investors to access music royalty investments. You can browse through catalogs of songs from different genres and artists and choose investments that align with your interests. Of course, like any investment, it's essential to do your research and understand the risks involved. The music industry can be fickle, and the value of royalties can fluctuate. A masterpiece portfolio investing in fine art. Let's move on to something that's both beautiful and potentially lucrative, investing in fine art. Now, you might think that art is only for museums and billionaires, but that's not true anymore. Fractional art investing has made it possible for everyday investors to own a piece of a masterpiece. Platforms like Masterworks and Yield Street allow you to invest in shares of blue-chip artworks that have historically appreciated in value. Think of it like buying stock in a company, but instead of a company, you're investing in a Picasso or a Warhol. Of course, the art market, like any market, has its ups and downs. It's crucial to do your research, understand art market trends, and consider the historical performance of specific artists. Authentication is also paramount in the art world, so make sure you're investing through reputable platforms. Fueling the future investing in private equity. Finally, let's talk about private equity. This is an area of investing that can be incredibly lucrative, but also comes with its own set of challenges and complexities. This is where things get a little more complex, but also potentially more rewarding. Private equity involves investing directly in companies that are not publicly traded on the stock market. These can be startups, established businesses looking for growth capital, or even real estate projects. The idea is to provide the necessary capital for these companies to grow, and in return, you get a stake in their success. Established businesses looking for growth capital often turn to private equity as a way to fund their expansion plans. This can include anything from opening new locations to launching new product lines. Real estate projects are another common area for private equity investment. These projects can range from residential developments to commercial real estate ventures. The potential for high returns in private equity is definitely there. You're essentially getting in on the ground floor of companies that could be the next Amazon or Google. Imagine the possibilities if you had invested in these tech giants when they were just starting out. You're essentially getting in on the ground floor of companies that could be the next Amazon or Google. However, it's important to remember that with high reward comes high risk. However, private equity is not for the faint of heart. It's a high-risk, illiquid investment. This means that your money is tied up for a longer period, and you can't easily sell your stake if you need cash quickly. The companies you invest in might not succeed, and you could lose your entire investment. Your money is locked up for a longer period, and there's no guarantee of a return. This is why it's crucial to do your due diligence, understand the risks involved, and only invest what you can afford to lose. Thorough research and careful planning are essential. Platforms like Moonfair, Seed Invest, and Forge Global have emerged to make private equity more accessible to individual investors. These platforms offer curated investment opportunities and lower minimum investment amounts, making it easier for everyday investors to get involved. And Forge Global have emerged to make private equity more accessible to individual investors. They offer curated investment opportunities and lower minimum investment amounts. So, if you're looking to diversify your investment portfolio and are willing to take on some risk, private equity could be an exciting avenue to explore. Diversifying your future, a world of possibilities. So, there you have it. A glimpse into the world of alternative investments. From tangible assets like luxury watches and farmland to intangible assets like royalties and private equity, there's a whole universe of investment opportunities beyond the stock market. Remember, diversification is key to a well-rounded portfolio, and alternative investments can play a valuable role in spreading your risk and potentially enhancing your returns. However, it's crucial to approach these investments with caution. Do your research, understand the risks involved, and if needed, consult with a financial advisor to see if alternative investments align with your overall investment goals and risk tolerance.